Hey guys, and welcome back to another video here on the channel. If you're new, my name is Brandon. As always, we do offer courses and training through our Investing Academy. If you're a beginner, you can click the first link down below. But in today's video, I wanted to talk about the possibility of the stock market continuing to go up, at least over the short term. We know over the long term that's what's going to happen, but I did just come across this article by CNBC. It was titled, JP Morgan says that stocks will climb nearly 50% as investors flee low returns in bonds and cash. And this was posted as of Friday. So very, very recent. And funny enough, you go to actually read the article because you're interested and they make you pay for it. So without even diving into the actual article myself and just kind of looking at the headline, it did get me thinking and asking the question, is it possible with everything going on in our market and the economy in the world right now that the stock market is still going to be heading up? And I want to start off with a quick disclaimer. This is not what I personally believe will happen. If you had to ask my opinion, my speculation on where the market will be a year from now, I do see a bigger chance of it being down from where we are today rather than it being up. And hey, that's not, that's just me kind of answering from the heart. We have no idea what's going to happen. That's one thing we know about the stock market. But what we'll be doing in this video is we're going to be going over a bull case and actually highlighting, these are in no particular order, but some of the things that an investor could argue that yes, there is more upside in this market. And I think that this is a really fun exercise in general, whether you're talking about the market, whether you're talking about a specific stock like Tesla or McDonald's, whatever stock you're analyzing, it's very important to always look at both sides of the coin. Wherever you stand, regardless of your beliefs, you need to look at both sides. And today we'll be doing a really, really aggressive look at the chance that this market continues on. I'd love to hear your opinions down below before we dive into things. So if you do have an opinion, drop a comment down below. But our first point for today's video as to why this crazy market could potentially continue to rise, that is, of course, that we have the elections upcoming. And if there's one thing that Trump and his team pride themselves on, it is the strength of the economy. The stock market performing well, this is really the backbone of his presidency. And of course, his campaign, if he wants to have the next 4 years in office, this is one thing that he is very much pushing for. And whether you agree with his philosophies and the way he does things and his ethicalness, that's not what we're here to talk about today. I think it is fair to say that prior to COVID, the American economy was functioning quite well. Really firing on all cylinders. The stock market was performing well, pushing all-time highs. And he's done, and in my opinion, will continue to do whatever he can to influence, shape, really just put his presence wherever it needs to be to keep this market going higher. That's a major, major selling point for him. And whether we want to argue that things are a little bit artificial and inflated because of all of the Fed action that we've seen going on, the reality is, as he pushes for his next term as president, he wants the stock market to go up. And that's, of course, worth mentioning. I think that is a very, very serious point as to why this market could potentially go higher. The Fed, of course, is something else to look into. And this doesn't necessarily relate to Trump, but the amount of money and the amount of stimulus that the government has had to come and pour into the markets to help kind of give a lifeline to our economy as everything is shutting down and people are losing their jobs. This, of course, plays a massive part in why our stock market is where it is today. And if we do believe there's upside in the future, the stimulus, the money printing, the backing from the Fed definitely can play a big role in that. On a side note, I've gotten questions on the long-term impact of all this debt that the government's taking on and all the money printing and inflation. And the reality is, it's really tough to say. We've never really been through something like this to this extreme amount. So it's hard to say what's going to happen. We're going to have to really wait and see because eventually someone's going to have to pay for this. It's going to come back and bite someone in the butt. But as for now, if we're looking over the short term, let's say a year out, are we going to be really facing the consequences from that now? A bull in this case would probably make the argument that that's not the case. The third one that we'll talk about, which was actually included in the title of this article, where it says here, as investors flee low returns in bonds and cash, that is, of course, that we are in a very low interest rate environment. And if history tells us anything, this is typically a good time for equity investors. And what happens when you're in a low interest rate environment? That, of course, means that our fixed income investments, our bonds, our GICs, our term deposits, the types of investments where you can typically lock in a very safe rate of return, the yields that we're pulling in on that are very, very low. In many cases, investors are asking themselves the question, is it even worth going out and buying a bond or buying a treasury bill if I'm going to be locking in 1.5, 2%? It doesn't leave investors much choice. Well, you always have the choice, but a lot of investors will ask themselves, why would I put my money here? I may just have to resort to the stock market and go out and buy, let's say, a dividend stock, a reliable one, I'll say. A lot of investors will actually start naturally leaning here because they just don't want to accept the low return that fixed income is offering because of these low interest rates. If anything, we're barely outpacing inflation. So this is another reason, a very valid reason, that investors don't have anywhere to park their money at the moment. And again, that was kind of the title of this article. Stocks will go up because there's no other options at the moment. On top of that, what I think is really interesting, and we've covered this chart here on the channel. I'll actually link a video that I've done. It's actually one of my favorite videos that I've done over a year and a bit ago, talking about the S&P 500. But one thing to make clear is that when we talk about the broader market, and in many cases people will refer to the S&P 500, which is a spread of the 500 largest companies in America, a very large percentage of that is devoted to a select number of companies. And you've heard the term the FANG stocks, the Facebooks, the Alphabets, the Amazons, the Apples, the Googles, and Netflix. That's really the FANG stocks, unless I'm forgetting one there, Microsoft. These tech components make up a very, very large percentage of the market. And despite everything going crazy in our economy, with jobs being lost and stores being closed down, if you ask yourself which companies have really benefited the most, or not benefited, but which companies have been hit the least out of the entire selection of stocks out there, which ones come to mind? You think of Amazon with the product delivery. You think of Apple, which, hey, they're still collecting their fees with Apple Music and whatnot. Netflix is a clear benefactor of stay-at-home, lockdown, quarantine times. These companies have actually been positioned extremely well to benefit from a crazy time like we're going through. And if they make up a huge component of the market, of course, is what we call a market cap weighted index, the S&P 500, meaning the bigger a company is, the more they represent. The market in general can be very easily propped up by the performance of a select handful of tech stocks. And if you're a believer in the FANG stocks, the Microsofts, the Amazons, and the Apples, you think they'll do well from now, it does make you think, could those companies alone propel and lift up the entire market? It's just something to think about. And I've got a couple more here on my list to just bang off. By the way, if there's one on here that I forgot, like if I did leave one off and there's one that you're thinking in your mind, leave it down below. I'm very curious to hear what a bull would say in a time like this. But of course, it's worth mentioning, you always have hope of a vaccine coming along. I know the reality is these types of things take time, but you are always hearing about steps and steps closer. This is something that a positive person could look at it on the bright side and say, hey, we're getting close to where we can go back to normal. We have new investors, as we touched on in the last video, just a massive spike in brokerage accounts being opened, a massive amount of beginner investors who I know at the end of the day don't have a whole bunch of money. And in relation to the big money movers, smart money, the hedge funds, the whales out there that can really move the market, this is not a meaningful amount. But the sentiment itself, in my opinion, can very much keep the market going. And I don't want to use the term bubble because I don't want to make an assumption that we are in a bubble or whatnot. But in many cases, when there's a bit of irrationality in the market, we've seen it time and time again, from Bitcoin to weed stocks to technology companies. You go back far enough, you can even look at tulips. Regardless of what you're talking about, when there's enough hype and there's enough excitement that's propping up a certain market, things can get to irrational levels. And I'm not saying that's where we are today, but hey, that's looking at it from a very, very kind of a devil's advocate point of view. And to finish things off, I had one point written down here. Don't even know if I'm going to leave this in or not, but I am a firm believer that in the stock market, everything is about its ups and downs and ebbs and flows. And that, not just the stock market. This goes for life. This goes for business. This goes for your emotions. It's all about the swings. And, you know, you have little swings, you have a little down, you're going to have a big little up. Or you have a big down period. Well, that's going to be followed with a big up period. And I mean, we've been through that all. I'm sure we can relate. Again, if it's business or emotions, it doesn't matter what we're talking about. When you're down in the dumps, what follows that is a very, very prosperous time. And when things are going almost too well and you're just rolling with life and everything, you should almost expect a big drop, a big swing of things. And if we were to look back at the stock market, if we look back at the history as far back as we can go, 2008, the financial crisis, was a very, very devastating time in the markets. This was, for many people, the scariest time they've lived through in terms of finances, in terms of life, with losing their homes, the financial system collapsing. If you didn't know, in statistical terms, the Great Recession of 2008 is the second largest downturn we've been in, next to the Great Depression. But if we've gone through something that steep and that low of a time, is it crazy to believe that we have a very, very prosperous moment following? Okay? I don't know if I'm going to leave this in here, because this is making no sense as it's coming out. But what I'm trying to say is, you throw a big rock into a pond, it's going to make a big ripple effect. The 2008 crash was a devastating time in the markets. Does that mean that following a period like that, we can expect an extremely prosperous time that maybe we haven't lived out yet? Maybe this COVID situation was a blip in the road, but we still have a lot more ways to go. These are just all a bunch of thoughts that I have in my head. And hey, if I lose a couple subscribers for just going cuckoo on you guys, so be it. I tried to explain that the best as I could, and I know I didn't, but I'd love to hear your guys' opinions on that. You know what I'm saying about the ebbs and flows? Probably not. But at the end of the day, if I were to summarize this video, I want to make it very clear that this is not what I'm expecting. I'm trying to play devil's advocate here and look at both sides of the spectrum and just try to get a full picture of what are the possibilities, what are the realities out there. And hey, the way that I'm going to play it is just stick right in the middle and take things as it goes. Really, I'm sure you're wondering by now, all this mumbo jumbo you're talking about, what should we be doing as investors? My advice to you guys is that nothing changes. Whether you hear an article about 50% upside from where we stand today, or you look at a super investor like Warren Buffett who's selling his investments and not even buying into this market because there may be worse to come. Your goal as an investor, for the average person out there, is to just stay consistent with your strategy. And it's boring to say, but we talk about time and time again how playing the timing game, especially during a volatile period like this, that's when all the timers try to come out. This is one of those times that can really devastate you, when in reality, just following your strategy, just dollar cost averaging and putting sums of money into the market in increments. You can do it over a month-by-month basis, a week-by-week basis, whatever works for you, quarter by quarter. It doesn't matter. Slowly deploying money into this market, whether it's going up, whether it's going down, is typically the way to go about it. And if you're an investor that's older, I know we have a lot of older viewers on this channel, and maybe you're not aggressively putting money into the market, you need to be especially careful that your portfolio is balanced and on targets. If you have 500 grand that you're managing yourself and you don't have targets set in terms of fixed income and equities and how you're really managing your risk from that standpoint, that's really where you guys should be working on and focusing on, is really dialing in to your personal investing strategy, making sure you have confidence in that, because where the market goes from here, nobody can control. I can't control, you can't control, CNBC can't control. Maybe Trump has some leeway here and there when he pulls some strings, but why bother with things we can't control? focus on what we can, and that's managing our portfolio well. That's putting money on a consistent basis, really just dialing into our own. You guys get the point of what I'm trying to say. I say this all the time. If you guys enjoyed my thoughts on today's video, you can feel free to give this one a thumbs up, and I'm dead serious. I'd really love to hear your opinions on this market. Do you think we're going higher? Do you think this is the start of a big downturn, as we did see that little sell-off to end the week? Or do you think we're just going to be in the limbo period for the next little while? Again, I have no clue. If I had to guess, I feel like we're going to be going lower. But hey, I'd love to hear from you guys. If you enjoyed the video, you can feel free to give this one a thumbs up. That is just an awesome way of showing your support on the channel for making these videos. If you're not subscribed, we post videos like this every week. We focus on all types of topics, investing for Canadians and stocks to buy, all sorts of stuff. So feel free to hit that subscribe button, and you can hit the bell for notifications. That way you'll know when I do make posts. Last but not least, as always, if you are a beginner and this stuff doesn't make much sense to you, or you have some money that you really want to get in the market the right way, you can click the first link down below to learn about our Investing Academy, because we have a training program that takes a Canadian from start to finish. You don't have to know anything. We'll guide you through, we'll walk you through. You get to join our community and ask questions and meet the others. It is just super, super cool. It's what we do here outside of the YouTube channel. It's that first link down in the description below. Go check it out if you're interested. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next